What is a cold skew and how we can make money out of it using AMD stock, selling and call spread, making about $100 to $200. Let's get started. Open Tasty Trade if you not have an account. Link below to sign up. Now, I'm gonna go over AMD and a call skew, but first I wanna show you something which is pretty crazy. This, the SPY, the S&P 500, this is not normal. Okay, you gotta understand. This crazy stuff here up to the 600 level, that's not normal. If you're buying the S&P 500 now, you think it's gonna go to 700? Good luck to you. I am trading, but I'm trading less. Okay, I'm trading less, and I'm super cautious because those levels are insane. Tesla is insane, Coinbase is insane, S&P is insane. Those are all at insane levels, okay? And I'm so happy that we did the Jade Lizard. Have you seen the Jade Lizard from a week ago about Tesla at like 350, 345, 350? This helps us. That's what I said. Some people in the comments, when we talked about Tesla, they said, hey, why would you do a Jade Lizard? Because if I don't do a Jade Lizard, I get obliterated by basically if the stock goes up non-stop, which it has. So let me show you something. You see here Tesla, just for the example, before we go about call skew and AMD, look at Tesla. We broke 8 times the Kettler channel. How insane is this? This is like super insane. If I was a gambling man, I would just sell naked calls, but I'm not doing that because that's just crazy. As you saw in all my last videos in the last 2 weeks, 3 weeks, and I started this channel. This is 8 times the Kettler channel. The default is 2. This is 4 times the default, and we already broke it. If you think Tesla is a good time to buy at 350, that's up to you. But that's why we've done the Jade Lizard. So there's no risk to the downside. There's no risk to the upside. The downside will expire worthless, and the upside, if Tesla goes to 350 and above, we are protected. So that was a good sign if you've done this trade. And look at this, IVR over 100, also insane. This all green means that it shouldn't run. This was an election move. ATR moved from like 8 to 16 in a day. Just crazy stuff. Let's go to AMD, but first let's also check on Coinbase. Is it the same thing? And I love crypto, don't get me wrong. I have Coinbase stock and Ethereum. That's it. Said it many times before. I will say it again. Look at this. Also, it breaks the 8 times the Kettler channel. ATR is absolutely insane. Moved from 10 to 18 in the last couple of days. This is a sign to me that while I will hopefully never stop trading, okay, until something like crazy happen, I am cautious. I am cautious about the future. I do think that a correction is due because there are so many noobs entering the markets at all-time high levels of around 600 S&P 500 and 80,000 Bitcoin and all that, and they think, okay, now it's a good time to buy. Where have you been in the last, I don't know, 15 years? Let me show you SPY just for the example. Let's see again. We are at this is the S&P 500 at almost 8 times the Kettler channel, which is 599.36, which is no, this is the Kettler channel 605. 605.47 is like the top of the S&P 500. Get this, S&P 500, the top of the top, 8 times the Kettler channel, which the default is 2. I changed the settings to 8. I am not positive about moving forward in a high direction. I suspect a crazy down move, but a crazy down move in all those stocks that you've seen and the S&P is back to the blue line. Is back, mean reversal to the blue line, and not to the green. The green at 490, 492, something like that. That's 8 times the Kettler channel to the other side. So it needs to move 16 times where it is now, which is insane as well. So I'm not banking on that as well, but You know, it's just crazy out there. It's just crazy. But we can make money. So that's the goal. As I said, I'm taking less trades, but my trades are 8 times the ATR, which is insane, and 8 times the Kettler channel, which is also insane. And I try to be cautious, but some levels, I just don't want people to think that those levels are fine and every day stocks should jump 10-20% every single day non-stop. It's not the case. So let's go back to AMD, to the subject of this video, and I want to show you something about what it's called, the call skew. Let's see what we got. First of all, if you see AMD, and I apologize, they started blowing some leaf outside the house, I don't know if you can hear that. If you look at AMD, this, well, it's not a great trade until you close it in a profit. But as you can see, the ATR is 5, that's fine. This is green, meaning that theoretically AMD should go nowhere. The implied volatility is pretty low. Usually I traded about 50 and above. And I just want to show you for the example a call skew, okay? And this is nice, the Kettler channel around the blue line, a little below that, which is around 160. Yeah, that's the around 160, and a little below that, 145 now. This is a good trade setup to me. It's not at the top and it's not at the bottom. It's in the blue line, which is where all stocks should trade it all the time, in my humble opinion. So what's a call skew? If you click on trade, okay, let me show you. Let's go back to where we are, the 46 days to expiration. 39 days to expiration. That's what I've put. Now I want to show you something again. Go back here. You see here 515. Okay, if you're new to my channel, I take the 515, which is the average price that the stock have moved, the AMD have moved in the last 14 days. This is the average price, $5. That's they move up or down $5 during the election, after, before. In the crazy 2 weeks, they move about $5. I multiply this by 8 because I want to sell options so extreme, and I get to the number of 41. Okay, that's the number. That's so extreme to the ATR. So now I take 146 minus 41, and I got a range of about 105 to about 190 on the other side. But I'm going to show you what I mean in the call skew and why I'm taking a different trade today, a credit spread with about $100 to $200 profit. I apologize for the outside, but the result is the same. So we got ourselves 105. Now let me show you. If you go to 39 days to expiration, December 20 right here, okay, and you open the 105 put. If you go to the 105 put right here, look at this, 26, 27. Okay, remember this, 26, 27. Now, if we take another 41, okay, we take 146 plus 41, we get the 185. Okay, remember this number, 26, 27. If you go to the 185, okay, we got ourselves 58 and 60. That's a call skew. Very simple. It means that the same levels, up or down, should be equal, but they're not. The premium is towards the call, the expectancy of the market that AMD will go higher, and if the market expects AMD to go higher, they're gonna make the call price a lot more expensive than the put price. Okay, it's like 101 information before we take a trade. So how can we take advantage of this? Again, if we know the ATR is 41, which puts us at 105 right here, but I don't like to sell below, I don't know, 50, 60, at least 50. I want to collect at least 50 cents for this trade, and if it's too low or something, I start to check call skews, put skews, all of this. If on one side a move of 8 times the ATR gives me 26 cents, and the same move on the other side gives me 60 cents, which is 2.5 more expensive, I will lean towards selling those calls. Okay, instead of selling those puts, I will lean towards selling those calls. However, in order to sell those calls, I don't like to sell naked calls. I either do a jade lizard or a credit spread or an iron condor. So I decided to do a credit spread and show you what it means. So this is a little low. Okay, we got the 185, but I'm gonna do a little less than that. So I have picked, and you can pick whatever that you want, but I saw a lot of liquidity, so I decided to make a trade to sell the 170, okay, which is like, I don't know, 5-6 ATR, and this is just a credit spread, okay, a call credit spread. You collect income. I'm gonna show you in a second how much. You can sell the 170 call, and you can buy, and simultaneously you buy the 175 call. That's one option. There's like a 90% chance of POP, probability of profit. I'm gonna change this because this is not enough for me. I'm gonna do 5 just to show you how it works. Your income is $200, $210. Okay, that's your profit. Your buying power affected, which is your max loss in this case, is $2,300, and that happens if by expiration the price of AMD will be above 175. But again, I am super cautious about where the market is headed. I'm gonna make trades. I'm gonna make less trades if I see that the calls are skewed compared to the puts. I will try to sell, but to sell a naked call, it's not gonna help you sleep well at night. Sell naked puts 8 times the ATR. That worst case scenario, I get assigned. Yeah, I'll do that any day of the week on stocks that I like to own. However, I still want to take advantage of this. So one way to take advantage of what we have is selling a credit spread. And because the calls are skewed, meaning you get more premium for selling calls, okay, and it also costs you a lot more to just buy call options compared to buying put options. As you see right now, I will try and take advantage of this. So the trade itself, let's go over this again. I sell the 170 put, I buy the 175 put for December 20, 39 days to expiration. And if I do 5, as I said, I collect $200, $210. My buying power affected, which is my max loss, is $2,300. If AMD breaks 175, and it's 145 now, so if you do the math, let's say 146 divided by 175, it needs to jump about 17%, 100 minus 83, about 17%. That's about right. 14 is 10%, 160. I don't think it's right. I think it's 20%, something like that. Yeah, give or take. Either way, AMD needs to jump almost 20% from today in the next 39 days for you to make a max loss. And your max profit is if AMD stays below 170. Now I know we said 8 ATR, but the 8 ATR is at 185. And sure, you can do that and collect $60 selling naked calls, which is another strategy, but I don't like to do that strategy. So this is something to consider. Now I would sell if I would just do, I don't know, to get extra income. I could add this naked put 105, but those 5, maybe those 5 contracts give me extra $130, okay? But now my buying power jumped to 18,000, and if AMD goes to, let's say, $100 or something in the next 39 days, then I'm on the hook for 5 contracts, which is 500 shares, which is about $75,000. So I don't want to get hooked for $75,000 just to collect another 130. So in this case, again, because the puts, the income from the puts is so low, you see the 185 and the calls are skewed. You see the $40. Even this 190. Look at this. you need to go to 200. Even 200 calls are more expensive. Between this 200 minus 146 is 55 pips, and you still collect 31 cents. And the 105, which is like 40, which is 8 times the ATR, you collect, it's absolutely crazy. If you go 55, it's basically the 90, you collect 11 cents. There's nothing here. There's no income. The income is not worth it to just be a naked put seller on AMD as of today. So this is another nugget that you can look when you look at trades before you go blindly and go, okay, I'm gonna sell naked puts, 8 ATR no matter what. No, just think before you do the trade. Be a little cautious, especially when this market is at all-time high and goes up 10%, Tesla, Coinbase every single day. It just doesn't, it's not gonna last. It will come down, maybe, I don't know. No one knows the future. I'm still trading, but I'm cautiously optimistic, as they say. Okay, but this trade at the end of the day, if you want to collect $200, you got a theta decay of 4.95 bucks a day. Every day this option will lose $5 of its value. 87% chance that this spread will expire worthless. Okay, the buying power is pretty good. I like to make about, I don't know, 5,000-6,000 as BP per trade. 8,000 is like my max, unless it's like, I don't know, gold and ES futures, stuff like that. But at the end of the day, 2,000 in buying power is not bad. Collect $200. It's about 10%, 9% in less than 40 days. Up to you. This is the trade of the day, but with also a little education about call spreads. I am trying to make the Excel that I'm doing for myself to go over all the stuff that I do on Tasty every single day, which takes me about almost 2.5 hours to go over all the IVR and all of this. Let me show you something. Okay, this is what I try to do every single day. Sell 2 to 8 ATR puts on Forever Stock. Tasty IVR Watchlist, 8 ATR puts. Liquidity also Watchlist, high option volume, 8 ATR puts. You see a patterns here, 8 times the ATR puts, meaning sell puts. That's the, if checkpoint 1, do selling naked puts as checkpoint 2. That's what I do. But if the skews, if the option premium for selling puts is so low and everyone are just gambling, buying calls, the calls are more expensive, I'm gonna try to find some alternative ways to make money in this market if the premium for selling 8 times the ATR is getting much lower than where it should be. And that's just a sign that this market is not balanced and we are due for a correction. When? No one knows. Let's see step 4. Go over all watchlist IV percentage change over 10%. Step 1. Result, sell 8 ATR put. Sell deep in the money put lips 13 delta, but this is on a portfolio margin. Once I'll have it, hopefully in the next 3 to 6 months. Forever ETF list, sell 2 ATR. This is like semiconductor, utility, oil ETF, regional banks, and the VTI, the total stocks. They sell 2 ATR for every 2 weeks, something like that. Iron Condor only on high price stocks with a 5% and up change in the IVR. And futures, I do short strangles, naked strangles on ES and gold futures every Thursday, 8 ATR to 100 days. And sometimes I do 10 days, depends on the premium if you saw the video. Now the option for the monthly expires on the 15th of November, which is this Friday, and then we will do for a hedge, I buy 1 SPY put for every 50K owned on 2 ATR. It's like hedge. There's another hedge option, not hedge, this is leap puts, Black Swan hedge. I'm gonna go and do some videos about it, but the point right now I'm trying to say that all this step 1 till step 8 with some variation takes me about 2 hours, give or take, for the minutes up or down every single day that the market is open. and from this I found, let's say, around 10 trades. Okay, and those 10 trades I put on my own Excel. To see the percentage that it needs to go down in order for me to still be out of the money, the income I collect, the buying power affected, theta decay, it's all in an Excel. From those 10, I usually pick like two to three every single day, and lately it's been one or two. It depends if there's more premium. It depends on the stock, it depends on many things. So that's one option. Now I'm thinking that from those 10, instead of I can either do all those 10, for example, that I collect. And by the way, earnings season, this number jumps to like 20, 30 a day, and the process takes like half a day, 4 or 5 hours. But so that's a lot. So my thinking here is to make like an Excel to sell it over, I don't know, $50 a month, something like that, where I put either all those trades that I potentially found from Tasty Watchlist on a day, or just the best of the best, which is like 3 of them. Okay, and I don't know. I'll figure it out. I'll put some in Excel and I'll keep you posted. It will probably be like a pinned comment in a couple of days. But that's my thinking. So you can do this by yourself and just pause the video and do all this every single day if you want. It's up to you. Or come to the Excel every day. See, like, here are the top 3. Not top 3, because if it goes to 0, we lose. It doesn't matter. But top 3 meaning you collect more income. It's far out of the money. And if it goes that far, yeah, I'll be happy to own stocks. Let's say, I don't know, Apple goes to like 200, Amazon to 160. Those are the trades that we've done in the last 2 weeks. Nvidia to 100, stuff like that. Google to like 165, Tesla at 220. So all those trades, if there's enough premium, if there's enough meat on the bone, from the 10, yeah, I'll probably do it. I'll probably do one Excel, not too many trades. I will find for my own trades, I will go over the watch lists and everything. I'll find 10. From those 10 of those, give or take, I will pick for me, as I do 1, 2, 3 trades. But for you, I will, which is the same process, and from those 10, I will pick like 2 or 3 and put them on an Excel, and you can have access to that. This is what I'm thinking. If this was valuable, yeah, subscribe. Let's grow this new channel. I'll see you next time.